Pre-market movers. In this video, we are going to talk about what are pre-market movers, how to find pre-market movers, and things to look for in the movers. So let's get started. What are pre-market movers? So pre-market movers are the stocks that are increasing or decreasing in value before the market opens, basically during pre-market. So we look at pre-market movers before the market opens because it gives us an outline of what's happening, right? So every stock that's presented here, what it does, it shows us all the stocks that are up or down a certain percentage before the market opens. So it kind of looks something like this. So if you guys take a look here, I have a list of stocks. So I have two sides. There's the green side, which is here, and there's a red side, which is here. So this is used from a platform that I'm going to show you, a program that I'm using. I'll show you what program that is. That program is showing us all the pre-market movers. In here, we have the stock symbol, the price, how much it gapped up, the percentage, the amount of volume that was traded, the company name, how far away are they from earnings, and the float, right? And then this side is for all the stocks that made a move down. And this, once again, are for all the stocks that made a move up. So let's look at a few. So right here, we have stock ACRS. It's at $1.92. It moved up 82 cents and is up about 74% in the pre-market. You guys can see the time right there. And it's up with 3 million shares traded. This is the company name, how far they are from earnings, and their float amount, right? Obviously, if you guys remember about float, anything below 20 million is considered low float. Anything above that, depending on where it's at, is not considered low float, right? On this side, you can see stock ONTX is at $1.89. It's down about 20 cents, basically about 11%, which with about 34,000 shares. So looking at this in the morning kind of gives us an outline of what's happening with a lot of stocks. What stocks are moving up? What stocks are moving down? What are the stocks where people are focusing on? And it just kind of makes it easier for us to pay attention to these set of stocks as well. Now, why should you look at the pre-market movers? Why should I focus on that? Now, the whole idea of looking at pre-market movers is to help you identify what stocks may make moves throughout the day, which gives you a set of stocks to focus on. By taking time on focusing on pre-market movers, you can create a trading plan for the day and map out potential trades. So the whole idea of looking at pre-market movers is just to kind of have an outline of what stock is moving, right? So as I mentioned before, there's over 15,000 plus stocks in the marketplace, right? Now, every morning, not every stock is going to move up or give you potential plays. So when you wake up in the morning, you can do a pre-market scan, and when you do a pre-market scan, you start seeing all the stocks that are moving up, all the stocks that are moving down, and then you can start painting the big picture of what stock you're going to trade, why you're going to trade it, what are you looking for it to do, and kind of take it from there. So this just narrows your focus down and allows you to map out potential trades. Because think about it. If a stock is up 30% in the pre-market, there's probably somewhat of an idea that it may continuously keep going up depending on the reason it's up, depending on the volume, depending on the criteria, and depending on a few factors which I'll break down, but it just allows you to map out those potential trades, right? So now, how do I scan for pre-market movers? Now, first and foremost, you need to use a pre-market scanner. Now, these are 3 pre-market scanners. The picture I just posted is from a website called Trade Ideas. Then there's something called Benzinga Pro, and you can also use Finviz. Now, these are all paid services. One thing I want to bring up is if you guys are in our group chat, these get posted in our group chat on a daily basis in the morning. So save yourself the money when you're first starting out and just go on the Discord and go in our group chat and look at pre-market movers. This gets posted there every morning. So just look at it from there instead of going on your own and just doing everything on your own. And spending the extra money, which I don't think you as a beginner should be spending right now. You shouldn't be spending money on all these tools or programs or softwares. Your whole goal should be education, building yourself up as a trader, understanding where you're messing up, what you need to improve, instead of spending out or dishing out money on a lot of different platforms or programs that I don't think should be the primary focus. But when you do get to a point where you're like, I want to do it myself, You can use a pre-market scanner. One is Trade Ideas. There's another one called Benzinga Pro, and there's Finviz. I personally use Benzinga Pro and Trade Ideas. I have both. And once again, like I mentioned, these are posted in the group chat. Now, once you open up these scanners, you can adjust settings. You can look up the pre-market settings, and you can look up the stocks that are making a move up or down in the pre-market. And they look like the picture I just showed you guys. Now, once you do that, once you have the pre-market scanner set up, the timing is you should start your first scan at 8 a.m. Eastern Standard Time. So basically about 1 hour and 30 minutes before the market opens. So depending on wherever you are around the world, this may not be the same exact time for you, but about an hour and 30 minutes before the market opens. Now, you don't have to do it before. Don't do it at 7 a.m. Don't do it at 7:30 a.m. because at that point, a lot of stocks or companies have not released news. A lot of companies start releasing news around 8 a.m. or after. Yes, there are some companies that announce at 7 a.m., 6 a.m., very, very few, but most of them start at 8 a.m., right? So it's better to just have a routine where you start at 8 a.m., and then after you do a scan at 8 a.m., it's also highly recommended that you do it again around 9 a.m. So do a rescan at 9 a.m., about 30 minutes before the market opens, so you can see if any potential new plays kicked in and how the volume is doing. Now, what I mean by that is think about it. Let's say at 8 a.m., a stock is up 37% on 96,000 shares, 96,000 volume, right? Let's say at 9 a.m., the same stock is up 39%, but the volume is maybe 101, right? So the volume from 8 a.m. to 9 a.m. barely moved, so it's kind of like, whoa, like is there even volume there? Is this even an interesting stock? And then the second reason why I recommend doing it at 9 a.m., because if you do it at, let's say, 8 a.m., between this window from 8 to 9, maybe some new news came out, maybe some new company presented something, they alerted something, and that maybe wasn't on the first scan, and it pops up on the second scan where you're like, oh man, this just popped up. It's up 80%, it's up 40%. Let me go and let me watch this now, right? So that's the whole idea of the first scan. You kind of outline the whole market flow, and then the second scan, you kind of start adding and taking some stocks off your watch list, which I'm going to show you towards the end of this part, and I'll show you a full walkthrough of that aspect as well. Now, what are some things we look for during our pre-market scan? So when you guys are doing a pre-market scan, a few things that you guys should look for are the following. So a few things to look for would be volume, right? You want to make sure that the stock that's moving up or down has volume, right? That there's some interest there, right? We want to see volume with the more up or down, with the move up or down, because it showcases more activity and more interest. Now, think about it, right? Let's say a stock is up, I don't know, let's say 40%, right? And another stock is up 10%, right? And it's 9 a.m. and there's about 30 minutes till the market opens. Now, obviously the stock that's up 40% looks very, very interesting. But let's say the stock that's up 40% is up with only 20,000 shares traded. Let's say the stock that's up 10% is up 10% with 500,000 shares traded. Which stock, right, or which move up looks stronger? A or B? Once again, which move looks stronger? The move that looks stronger is obviously B, because that 10% move, even though it's less than the 40% move, is supported by volume. This move is not supported by volume. Think about it. A stock goes up 40% and only 20,000 shares are traded. That's not a strong move at all. I'd be worried at that point. I'm like, whoa, I'm not even watching the stock, right? So you want to make sure the first thing that aligns is volume. Now, how much volume should you see, right? Now, typically, I like to, at least by 9 a.m., I like to see at least 100,000 shares traded. Now, the reason I say the word 9 a.m. and I bring that timing up is because when you do a scan at 8 a.m. sometimes, you're going to get a lot of stocks that are maybe have 30K shares, 40K shares, 50K shares traded. But as time progresses and you get closer and closer to the open, if that is a real strong move, there's going to be more interest stepping in. There's going to be more volume. There's going to be more demand, and that will drive the stock higher or lower depending on the move, right? So you want to see volume. The next thing you want to see is you want to understand why, right? If I see a stock is up 10%, if I see a stock is up 20%, I want to see why is this stock up, right? Because a stock just doesn't randomly just go up. Like there's very few times I've seen where a stock is up 10% and you look and there's no news or there's no catalyst. Usually there's catalyst, there's some news, right? News could be earnings, an FDA approval, the company gets an upgrade, a downgrade, some set of news that kicks in that makes the stock either go higher or lower, and that needs to be looked at. So whenever you see a stock in the pre-market and you see it's up or down, first thing you want to look at once again is volume. Okay, is there volume? I like to see at least 100,000 shares traded before 9 a.m. or around 9 a.m. Next, I like to look at why is this stock up? Why is this stock down? I want to look at the catalyst. I want to look at the reasoning behind this move, right? Because sometimes what happens is the reasoning, right? It's up because of earnings, and you're like, okay, why is it up because of earnings? Maybe they increased guidance. Obviously, when a company increases guidance, that's amazing. Obviously, if a company decreases guidance, that's the worst thing a company can basically do because that's going to shoot the stock price down. Sometimes they get an FDA approval, and it's kind of one of those biotech companies that pumps up in the pre-market and then starts fading away when the market opens. So it's like when you start seeing these different sets of news, different sets of catalysts or events that are driving the stock up or down, you start being able to identify them better once you see them consistently over and over and over again. Next, depending on your trading style, one thing you can look at is something called the float, as I mentioned before. So the float, what that represents is the shares available to trade. Remember, the lower the float, the easier it is for the stock to fluctuate on both ends meaning up or down. 20 million or less is considered low float. So remember, depending on what type of trader you are, some people don't like to touch stocks that have a float below 20 million. Some stocks have a float of 1 million. Some stocks have a float of 3 million. And you're going to notice the stocks that have a float of 1 million, stocks that have a float of 3 million, they move up in such a fast and rapid way. And then they also go down in the same way, right? So it's like some people are not comfortable in trading that. And if you're someone that's not comfortable in trading those type of stocks, you don't have to. And you shouldn't, right? You should trade stuff that you're comfortable with, that you understand, and that aligns with your trading style, right? Now, once that's all done, obviously you can't just say, okay, I'm going to put this stock on my watch list, so I'm going to put that stock on my watch list. The final thing is charting, price action. Make sure you chart your stocks and look for potential plays. You guys can't just put a stock on your watch list because it's up 37% with 500 shares volume based off good earnings or good news, right? You want to look at the chart. You want to look at, okay, does the trade setup make sense? Can there be a trade setup? If the stock does X, Y, and Z, will I be interested? A lot of times, stocks align with part 1, part 2, part 3, where they have great volume, they have a good catalyst, they maybe have a low float if you're looking for a low float or a high float if you're looking for a high float, but the chart is terrible. It's all over the place. So you're like, not really interested. I don't want to touch this, right? And in part 12, I'm going to walk you through a lot of different stocks that I traded, my thought process on how I found it, why I bought, where I got out, and like the full thought process of the full trade on managing the trade and everything like that. And I'm going to show you how I scanned and how I found each stock. But before I do that, I just want you guys to understand this full concept, right? Now, let's go over some examples. Now, as we look at this right here, once again, this is a pre-market mover. So these are the pre-market movers. Same thing, we have the gainers, we have the losers here. So once again, we have the gainers here, we have the losers on this side. So the first stock we're going to look at is ACRS. So ACRS is at $1.92. It's a $1.92 stock. It's up 82 cents. It's up 74% on 3 million shares, right? Now, their float isn't extremely low, but it's a solid, good float, right? Now, before I move on and I show you this example, what I want you to understand is this is something that a lot of people lack. So when a lot of people look at this list, they're like, wow, there's so many stocks. How am I going to get through each and every single one of these? It's 9 a.m., right? The scan happened at 9 a.m. So I can start cutting some trades out. I'm like, only 30K shares. I'm not interested. Only 3,600 shares. I'm not interested. 4,000 shares, I'm not interested. 8,000 shares, I'm not interested. All these stocks, you can see, no volume, I'm not interested. I don't even want to look. I don't even want to look. I don't even want to look. All these stocks, I don't even want to look. Now, obviously, there's some stocks that didn't move up a lot, which I'll get to, but they have a lot of volume. So all these stocks that you guys see here, I'm not even interested now. They're up 1%, 2%, not really interested at all, right? Now, another thing to look at is volume. So even actually, let me eliminate this. I can maybe go into volume and see stocks that traded a lot in volume. So we have, let's say, Square. We have, let's say, stock TOT, right? We have stock CL, right? 100K on a 2% move, nothing crazy, but seeing something 300K or 400K is pretty interesting. Right here, mRNA, interesting. Not really interested in that. So I can start going in and I can say, you know what, this looks interesting. I want to look at this. Okay, this stock is up 74%, good volume. This stock is up about 8% on good volume. This stock is up about 8% too. Cool. I'm gonna look at this. 5%, 4% on 39K. I'm not interested. I don't want to look at it. And this is just the stocks that are making a move up. This one, if I want, I can say, you know what, I look at it. Maybe I won't look at it. That's up to you. But me personally, I'm not interested. Same thing here. So at this point, what I start doing is I start saying, you know what, these are the stocks today. These are stocks that I'm interested in. I'm interested because they made either a good move up with good volume, or they had somewhat a move up and strong volume. So I'm like, you know what? These are all the stocks I'm going to put on my watch list. Now, that's not my final watch list. My final watch list will come in the end. Now, once these come on my watch list, my process is to go through each one of them and look at why is this stock up, right? Remember, we look at why, and then we look at the chart. So we got the move up and we got volume, and these are the stocks that align. But now when we go to why and we look at the chart, that's going to be two different components. That for stocks that made a move up. Now, for the stocks that made a move down, same concept. Down 11%, 34 shares traded. I'm not really a fan of that. Down 9% with 448K shares traded. Interested. Not interested. Not interested. Not interested. Okay, interested. Not interested. Not interested. Shopify. Down 4% on 317K. Interested. Shopify is a very big company. 4% down for a company like Shop is huge. That's $16. Very, very huge for a company like that, right? Interested. Right here, not interested. Not interested. Not interested. KHC, I can say, you know what? I'm interested. Not interested. Not interested. Not interested. Not interested. And then I just start cutting out all the small moves up or down, right? So these are all out. So now from here, I can start putting these stocks in. And I can say, okay, what stocks are making a move down? Does it have a strong move down? Yes. Is there volume? Yes. You have to understand, seeing a stock like GLW and seeing a stock like Shop, 4.7% may not be 10%, may not be 20%, may not be 74%, but this is a different company. This is a very large company. So 4% for a company like Shop being down about 4.7%, close to 5%, is massive. That's a lot. And look at the volume. A lot of interest on that move down. So once again, what I do is, why is the stock down? And then I go to the chart and I create potential setups, right? So let's go through the first one. Let's say we look at stock ACRS. And as we look at stock ACRS, we see that it's up 74% on 3 million shares traded. So what we do is we go to the chart. So this is what we see. ACRS pre-market example. So when we look at here, this is a chart for ACRS for that day, right? So when we look at ACRS for that day, we see that it's up. So ACRS shares rose about 71% pre-market Tuesday to 188 after phase 3 trial for wart treatment. So basically, their company is up because of phase 3. They got approval on phase 3 trial for wart treatment, right? So a pharmaceutical company, they're going through multiple phases, and getting news like this is obviously great for the company, right? Now, then we look at volume. How's the volume? There's strong volume in the pre-market. 3 million shares traded shows a lot of interest. Now, this move is very, very good. But it doesn't tell us or give us the go and buy the stock right away. This is where trading kicks in. Right now, we filtered down a stock, and it's a stock we're narrowing down on, we're watching. We're like, wow, this is it. This is what we're going to watch. This is what we're going to pay attention to. Phenomenal. But now, is that enough for us to go and trade it? No. Now, this is where the trading concept kicks in. Obviously, we do the whole 3-year, one-day analysis. We do the top-down analysis, which I'm going to walk you down in part 12 on multiple trades. We work from top down. We identify critical levels. We look at the trend. We look at everything going on, and then we establish levels. Now, based on this point, boom, 2032 resistance. We have a gap here. Depending on how the stock moves, maybe I'd want to buy it above 232 on a strong move up. Maybe it may fill the gap. I may want to short it down here. Maybe I'm not interested in trading this because it's at 2032 cents, and based on my trading style, it doesn't align, and I don't really like stocks like this. That's up to you, right? So identifying that in the morning is very important. And then if this is a stock you like, if you do like the chart, what you do is you take the name, you put it on your daily focus list, which I'm going to walk you through on the end of these videos. And then once you put in your daily focus list watch list, you now know what you are waiting for it to do. And even if you guys want to set alerts, depending on what platform you use, you can set an alert saying, hey, if the stock gets to 230, automatically let me know. The stock gets to 150, automatically let me know, right? So the system will then alert you and say, hey, stock ACRS is at 160, it's at 150, it's at 230, it's at 240. So you don't have to go and watch 10, 15 different stocks at the same time. So when they do something you've outlined them to do, the system will alert you. Now, the whole idea, once again, in the pre-market is to identify these stocks, identify the volume, identify why they're up, look at the charts, and have a plan. What do I want ACRS to do for me to be a buyer? What does ACRS have to do for me to short, right? These things have to be created before the market opens, before you actually go into the trade. You can't just walk into this trade blindly and say, I'm just going to watch this. I don't know what's going to happen. If it goes up, I'll buy it. No. Just because it has good news, just because it's volume, doesn't mean it's going to keep going up. It doesn't mean it's going to go down either. It doesn't mean it's going to stay flat. We don't know that yet. We watch on the open and we construct a trade, right? So now let's see what happened this day. So this day, you can see. So what happens is that was pre-market. Market opens. There was no real move at all, right? Stock opened. You can see we're on a 30-minute chart. Stock opens, first 30 minutes, makes a move down. Holds around this level, about 160, moves up, and then just kind of fades out, right? So no real move. Maybe there was a 10 a.m. move right here, which I'll break down in part 12 when I show you real trades. There was maybe a move at 10 a.m. where reversal happens, but not an easy trade. This was not really an easy trade, a very, very hard trade. So this is just to show you that if you had your alert saying, hey, if the stock gets below 160 or above 232, I'll maybe enter here for a gap fill. If it gets above 232, I can see that the buyers are extremely aggressive and they're going to maybe drive the stock higher and higher. So I'm interested in the stock at that point. If not, it's just going to be one of the stocks on your screen on the sideline that you're not really watching and you have your alerts on, right? So this is the first example. Let's go over another example. Now we're going to look at another pre-market scanner for another day. So in this stock, let's say we go through our list again. We get all the stocks with good percentage move up or good percentage move down and volume, right? So we have stock ENPH, right? It's up 17% on 150K volume, right? It's 8:30 a.m. It's not even 9 a.m. yet. That's pretty solid. Now all the stocks that don't really have volume, I'm not even really gonna focus on them. Like 2,900 shares. I don't want to look at a stock that only traded 2,900 shares. I'm not interested in that, right? 18,000, not interested. 30,000, not so much, right? So I can always come back to these, right? So, but for now, let's just look at ENPH. I like it. It's trading at $25. It's up $3.82, 17% on 150,000 shares, which is solid, right? So what I'm going to do is I'm going to look at the chart. So I look at the chart. This is what I see on the chart. I see it was up yesterday. Obviously, looking at this chart, I can see it was primarily because of earnings, right? So let's go into the reason. So at 9:20 a.m., ENPH shares rose over 20% pre-market after reporting better than expected quarter two earnings. There's also over 150,000 shares traded pre-market, right? So there's a lot of shares traded. That's a good amount, which is pretty healthy. Shows a lot of interest, right? So far, I like the news. The news is good. I know why it's making a move up, right? Now I look at the chart. Yesterday, stock made a move up, strong move up, faded, and then today, with volume kicking in, It's making a new high at 26.8. So I'm interested in watching the stock on the open. Now, I'm not going to go on the 3-year chart, the daily chart, and identify levels, show you the trend, break everything down on a deeper level. I will do that in part 12, but right now I just want you to see different scenarios that happen after a stock is up or down in the pre-market. So now what happens with the stock? Market opens, you guys can take a look. Market opens, breaks the pre-market high, makes a strong move up, and then just slowly continues until 12 and then fades. Now, obviously, as a day trader, just to remind you again, when you guys are trading, try to be done by 11 or maybe 12 a.m. Don't sit in front of your computer until 4 p.m. because a lot of time market becomes dead after 11 or 12 p.m. Right? So in this situation, you can see the first about the first 2 hours, stock moves up, slowly fades up, slowly goes up, and then after that starts going down. But overall, there was a strong move on the open, breaks pre-market high, consolidates, right, and then continues and makes another move up, right? So this was a stock that basically made a strong move up and gave us a play. Now let's look at more. Now in this situation, let's look at the stocks that made a move down. So we're looking at glue, stock GLUU. So stock GLUU on another day, right, is down 26% on 45,000 shares. Obviously not the most amount of shares, but also consider the time. It's only 8:10 a.m., right? We can do another scan in another 50 minutes, and we can at 9 a.m. we can see maybe shares go higher. But as of right now, I'll watch this, I'll watch that, I'll watch this, I'll watch. Even though it's not over 100,000 exact, but it's still kind of 8 a.m. Like we still have 50 minutes to go. We still have time. Like we have an hour and a half to go until the market opens. So there's still a lot of room on the volume aspect, right? So with that being said, that's why looking at the time on when you're scanning is important. Now, if I go and I scan at 7 a.m., guys, you have to understand, I'm barely going to find volume. I'm going to do a scan at 7 a.m. about 2.5 hours before the market opens, and I'll say, you know what? There's no plays. Let me close my computer. No. That's why you start at 8 a.m., and then you redo a scan at 9 a.m. Some days you'll find a lot of plays. Some days you'll find a few plays. But the whole idea is to create consistency with this if this is how you want to trade, right? Now, we look at stock GLUU and we're like, all right, phenomenal. What happened? Wow, stock dumped. Wow, huge move down. Obviously, we can tell from here it was because of earnings, but let's look into the news. When we look into the news, we see stock glue shares, it's not rose, decreased over 25% pre-market after reporting earnings and dropping guidance, right? So stock glue shares decreased over 25% during the pre-market after reporting earnings and dropping guidance. This, guys, is huge. When a company drops guidance, right? Whenever a company drops guidance, that's very, very bad. Or whenever a company increases guidance, that's very good. Just to recap, when I went over this in the catalyst section, but just to recap, guidance is basically what the company expects for the year. A company might say, we expect to make $100 million in 2019, and then during earnings, they might say, you know what, in 2019, we expect to only make 80 million, right? That decrease in guidance or dropping guidance will ultimately affect the stock price in a very negative way, right? Now, I'm not saying if you see dropping guidance or increasing guidance, you always trade. You still go with the same outline. You still got to look at price action. You still got to look at the chart, right? Now, looking at the shares, there's over 100,000 shares traded pre-market. So there's a lot of shares traded here. So that's very, very interesting. There's shares traded. There's interest even on the move down. So right away, stock glue is a stock that I go, you know what? I'm interested. I want to watch this stock. I want to have it on my watch list. I'm going to pay attention. I'm going to watch this on the open. And then obviously I create a game plan. What am I looking to do? Am I looking to buy? Am I looking to short? I'm most likely looking to short. Company drop guidance. It's slowly fading off. Maybe breaks the pre-market low. Maybe get in there. Maybe get in after 10 a.m. I don't know yet, but I know that I want to play this on the downside. They drop guidance. I don't really see anything good coming from it. Maybe buying pressure kicks in. Maybe it oversold. I'm not sure. But my whole idea is when I go in, you want to have that game plan on identifying what you're looking to do if the price does X, Y, and Z. Now let's look at the aftermath. What happened? Stock opened. It breaks pre-market low. Right? You can see it breaks the pre-market low right there. And then it continues dumping. It continues to sell off. It makes another strong 15, 20% move down even after the open. We as traders just care about that. That's it. Like I'm happy with that. I capture even a little piece of that, not even the whole move. Let's just say I even captured this much. I'm happy. Why? I did my pre-market analysis. I did my pre-market scan. I like this stock. I like the reason it was down. I like that they decreased earnings. Decreased guidance. I like that there was volume. I like the move down on the open when it broke pre-market low. Give me a solid entry. I got it. Right? And that's the whole idea of looking at the pre-market movers, because now you know what stocks to focus on. You wake up, you kind of have a game plan that you outline yourself, and you understand that game plan at a deep, deep level. Now let's look at a few more. Now here, we're going to go back on the upside. 8:41 a.m., we look at the list once again. We see stock PVTL. It gapped up $6, about 72% on 650K shares. Great. Phenomenal. That's amazing. Obviously, we don't want to see a stock that's up 5% on 2,000 shares. I don't care about 2,000 shares. That's shouldn't be something we're watching. Interested. 553,000 shares on Walmart. 6% on Walmart. Interested. 95,000 shares. Interested. Not interested. Not interested. 239K shares. Interested. 832. Interested. 229K shares. Interested. 365. Interested. Right? So these are stocks I'm interested in. Right? Same thing here. Whatever stocks have shares. Now this stock is stock JE is down 24%. Wow, amazing. Down 24%. I'm interested. What about the shares, the volume? 6,800 shares traded on a 24% move down? I don't want to look at that. I'm not interested at all. 18% move down on 2,000 shares? Not interested. 9% on 6,000 shares? I'm not interested. 247,000 shares on 14%? Okay, cool, I'm interested. Now we look at why did the move up happen? Why did the move down happen? What caused this move? So we go and we look. This is the chart we see. We see that stock PVTL is up. It's up a lot, right? It's up. Look at yesterday, makes a nice move up on a 5-minute candle, holds, and now it's having a hard time breaking 14.4. Now we go and we look at the news. Why is this stock up? What's making it go up so much? So when we look at the news, we see that stock PVTL shares rose over 70% pre-market after reporting that VMware is proceeding with the deal to acquire PVTL at $15. So basically, this is an acquisition deal. So what's happening here is that another company called VMware is interested in purchasing this company for $15 a share. So because of that, this company gapped up. The stock price gapped up drastically. Now, what is their volume? Yes, there's over 650,000 shares traded. Very interesting. Now, this is where I want you to start connecting the dots. Now is where kind of common sense kicks in. Now is where you as a trader, your critical thinking kicks in, right? And I want you guys to think for a second. Really, really focus here, right? Think with me, and let's walk through this thinking process. So PVTL is up 70%. Phenomenal, okay? PVTL is up over 650,000 shares. Phenomenal. Good amount of volume. They're up 70%. Great news that they're looking to get bought out. But now let's look at the news for a second. Let's understand, because this is where the whole good trader and bad trader part kicks in, right? Because if you're a good trader and a great trader and you understand things and you can actually apply critical thinking and think things through, you'll understand where I'm trying to get to right now. They're looking to acquire them at $15 per share, right? The deal hasn't happened yet. There's talks going on that they're looking to acquire them for 15 bucks. Now, one thing I want you to understand, the stock is already at 14.4. That's the pre-market high. Now, when you see news like this, you also have to play a bad guy, right? You have to become a devil's advocate. You have to say, listen, okay, stock is already at 14.4. If this deal doesn't fall through, right, there's a possibility this stock can dump. Cool, I understand that. Let's lay everything out. If this deal doesn't happen, stock can dump. Yes, they're in talks to buy it at 15. Now, obviously, since they're looking to buy it at 15, then someone can come and upbid them and say, oh, we want to buy it for 17. But let's just look at the facts. What if they do buy them for 15? What is really my upside, right? What is the upside here? What is the downside? Me seeing that right away, I am not holding a stock like this overnight, because now if I hold a stock like this overnight, I'm crossing my fingers Because now, let's say the deal doesn't go through. What's going to happen? They're going to dump. The deal does go through. I'll maybe make 30 cents, 40 cents, 50 cents, 60 cents on the trade. But if it doesn't go through, I got to cross my fingers, right? So that's one thing where it's like, I'm not holding this overnight, because me holding it overnight, I have no edge. I have zero edge right now. The only thing I have is hopefully they get bought out, or hopefully they get a higher bid. But if the deal doesn't go through, stock's going to tank. It's going to hurt me very, very bad. So that's where I can say, you know what? If the stock maybe breaks pre-market high, I can maybe go in for a quick scalp, a quick trade. But now, am I really interested? Me personally, when I see stuff like this, depending on what stock it is, what the deal is, at times I would be interested, but other times I'm really not. But I also like to wait for the open. I like to see what happens when the market opens. I like to see what happens with this stock the first 5, 10, 15 minutes. Is there buying pressure? Is there demand? Or are people exiting? The people that got in, right, and are profiting, are they dumping their shares and taking profits? Like, what's going on? Now let's look at the aftermath. Let's look at the aftermath of this. The aftermath of this, we can see what happens. It's unable to hold on the open. 14.4, it's trading around 13 bucks. It's trading sideways. Why? Because people are skeptical about the deal. So now if I buy this here, I'm not really trading it because it's very, very hard for me to take on a trade here. But I'm kind of holding on with the whole idea that this stock may possibly go higher. Maybe they might get bought out. That's a trade you have to think about. I personally wouldn't make that because there's no edge. I don't know if they're going to get bought out or not. If you have some analysis that you do and you have an idea, whatever, cool, go for it. But it's also very risky. My trading style doesn't align with this. My trading style isn't saying hold a position overnight. Since I'm not holding a position overnight, this is not a stock I trade or hold because of the set of news that's out for this. So that's where the critical thinking concept kicks in, and you have to understand and apply, all the resources and all the things that you've learned into each and every single trade. Now let's go over another example. Now we're going to look at stock SINT. So SINT was also on our pre-market movers. So SINT up about 28% with 360K shares, right? Pretty solid volume. Now let's see how this stock looks. So SINT. Now, looking at SINT shares rose over 28% pre-market after reporting better than expected Q2 earnings. So they had earnings, great earnings, phenomenal. Over 350K shares traded pre-market. Now, one thing I want you to keep in mind that stock SINT has a very small float. Very small float. Let's go look at their float real quick, right? Let's look at their float. Let's go right here. This is their float. Look at their float. 726,000 shares. Not even a million, not even 2 million, not even 4 million, not even 5. 726,000 shares is their float. Stock PVTL has 94 million shares as float. Remember, anything below 20 million is considered low float. This is not even 1 million. So this is like micro float. This is an extremely small float. So stocks like this with this small float can go up and down like this like no tomorrow. So that's where you're aware. You're like, wow, this is a very small float. Do I want to trade something with a small float? Yes or no? Me personally, I don't trade stuff with small float. Some people do. They do very, very well trading these. Some people don't. It's all preference. Not my preference. I'm not interested, right? If I'm not interested, I'm not even going to look at this. I move on. But if you are someone that's like, hey, I like trading small, low floats. I love it. I love stocks that can make big moves up, big moves down. Something I want to trade. Cool, go for it. Now, if you are someone that's trading it, you look at this and you're like, what's going on? They're up because of great earnings, phenomenal, great volume, everything looks good. So obviously you create your trade setup, you look at everything and you take it from there. Now what happens with this stock? You can see, breaks pre-market high, continues, pulls back, makes a high of the day, and then look what happens throughout the day. There's a midday dump. Now why do you think there's a midday dump? I want you to think about this. Why do you think there's a midday dump? Now there's a midday dump because stocks like SINT, right? They, with extremely low float and extremely small companies, they're not really held by a lot of people. Like not a lot of traders tend to hold them. They're not comfortable in holding these positions. These positions are meant to day trade, meaning you buy, you get out, you get out, you buy, you get out, you buy, you get out, and then boom, everybody starts selling. People get trapped. These are like day trading stocks. Like these are stocks that majority of people that got in here are exiting around lunchtime or maybe exiting around 1 p.m. or 2 p.m. So you need to be aware of that. Now, seeing that, you can see the aftermath. Was there a play on the open? Yes, there was a great play on the open. Stock did very, very, very well, right? That's phenomenal. But looking at the overall picture, what happened throughout the day? It dumped. Now, that should alert and alarm you on something just to show you that, hey, me trading this or me taking on any day trade, make my money and get out. If you traded this even around, let's say you got on the pullback, wherever you got in, which I'll show you examples in part 12, wherever you got in, you would have made money. You would have made 20%, 30%, 40%. You would have done well for the day. Very great trade, very great setup, phenomenal. That's if you're trading a company with a very low float. If you're not, you move on from it. But if you are and you traded it right, you could have gotten a piece. Now, the whole goal that's set out for you is to get this piece. That's it, get a piece. Your goal is not to buy and then get confused on where do I sell. And that's where trade management kicks in, which I break down in the next upcoming part, right? But before we get into that part, I just want you to know, like the whole idea that I want you to get up until now is your goal is to get a piece, right? My goal when I go into trade is not to capture, buy here and sell right there. That's not possible. But if you get in maybe somewhere here and you get out there and you get a piece, or maybe you get in here and you get out there and you get a piece, that's good, you move on. Now the whole idea of the pre-market scanning and the pre-market gappers and creating a watches and setting up your morning and all, the whole idea of that in simple terms is so you can prepare yourself for the day to find these type of stocks. Because if you don't do your pre-market homework, if you don't do your pre-market analysis, you don't do your pre-market walkthrough, you don't understand what's happening in the pre-market, right? It just makes things a lot harder for you where you're like, okay, I don't know what's going on. I don't even know what stock to look at. But now if you have some stocks that you know what stocks you want to look at, what each stock is doing, maybe what's the float, is it up on strong volume, is it down on strong volume, what's the reason it's up or down, what's the chart saying, you kind of create an outline, right? And that's the whole idea of having pre-market scanners, of looking at these set of stocks, of looking at stocks that are up, looking at stocks that are down, and creating like a massive watch list that allows you to focus on a few set of stocks that are high quality, that have the highest probability of giving you a potential play for that day. And that's the main focus on having these sets of watch lists or having a pre-market scanner. Now, in the upcoming videos, I'm going to show you different ways of scanning. And then once we get to the end, I will show you guys how to build a massive watch list on how to have a watch list for sectors, market, and so on. And then obviously in part 12, I'm going to show you examples of how I scanned, how I found a stock, and how I traded. Like we're going to start putting the pieces together. So right now, I just want you to absorb this information. And then in part 12, once we get to that part, I'm going to walk you through each and every single trade, why I bought, why I sold, how I found it, what made this stock interested, what I looked at for the market, and kind of put more and more pieces together.